Last week, I held my latest in-person workshop for students and clients, and after one of the sessions where we talked about having a multi-tiered approach to the market, one person came up to me and asked me, Serge, what is the one chart that you would look at right now for clues as to what may happen for stocks into year end? And I gave the person the answer, of course, and I thought about it and said, you know what, this is kind of an important thing. So why don't we make a YouTube video on that? So let me show you guys what I think the most important chart is right now at the year end, and more importantly, why and how we got to that, how we narrowed it down to that one single chart. Let's have a look.
So in order to narrow things down to what I consider to be the most important chart for the rest of 2017 into year end, we have to go through a process. And let me remind you here one more time, and I talk about this to Clubhouse members in every single morning video and on all my workshops to all my clients. Unless you have a process, a repeatable process, you really are just randomly fumbling around the market. And that randomly fumbling around the market is what most people do. It doesn't matter whether you have a good few weeks, good few months, quarters, or even a couple of good years. Ultimately, the chances are empirically very, very high, like 90% plus, that you give back most, if not all, of those profits. And we really don't want that. So the first thing what I've done is I've broken down the market into different subsectors and groups. But more importantly, I've developed an algorithm that tells me when something is short-term bullish or short-term bearish. Same thing for the medium term and same thing for the long term. More importantly, when something goes or moves from short-term bullish to bearish and vice versa, and again, different time frames. And these are the scanners you can see here. They are, by the way, available for purchase. If you're interested, you can leave a comment down below. You also need to understand how things are connected. Like, so for example, what's the Dow Jones Industrial Average? This is the ETF representing the Dow. What is it made up of? What percentage of this kind of stocks? What percentage of that kind of stocks? And so on and so forth. So that gets me to the Russell 2000, which, by the way, I think is right now the most important chart into year end. Well, if you look at the Russell 2000, we can look at the IWM ETF right here. First of all, let's just do a very simple technical analysis, and then we'll look at why this is so important. For the most part, the Russell 2000 essentially treaded water for, let's call it, end of 2016, really all the way up until July of this year. They made a marginal breakout, we corrected back to the lower end, but then finally we got into the September period, made a real meaningful breakout. Well then, and this is really the most important part, you can see that the Russell 2000 actually had a consolidation period. And that consolidation period was roughly about 4% deep. Now that's a joke, that's a very minor consolidation period, but it was a consolidation period. Unlike the S&P 500, which really didn't consolidate at all, which is why I think the S&P 500 is probably very capped in terms of the upside. But let's look at a couple other things. Let's look at, for example, here in our short-term bullish column and our short-term bearish column. And what we're trying to do, and also the medium-term bullish and bearish column, we're trying to find is parts of the market that are looking interesting for further upside. So for example, you can see the financial stocks, even though they're near-term bearish, they're medium-term bullish, and that's one of the important things to understand. So the Russell 2000 is made up of like about 25% or so financial stocks. Okay, so the XLF being near-term bullish and looking very constructive for a move higher due to interest rates gives me a lot of confidence that the Russell 2000 may actually have further upside. You throw in the recent bullish move in energy over the past few months, which I do think has potential to go higher, and you've got a large weighing, a large part of the Russell 2000 that you may be fairly correct on. Well, if you are something like 40% of the Russell 2000 you have a bullish view on because of two subsectors, you can probably then rely on these technicals a lot more. And that's one of the key things I see a lot of people do, in my opinion, not as good as it could be done, but they just look at just the technicals, and by just doing that, they are missing out on a lot of the picture. So the Russell 2000, make a long story short, I think is the most important chart at year end because it encompasses the move in energy and financial stocks. So I would not be surprised to have the Russell 2000 give us some outperformance into year end. If you talk about the IWM ETF, I think 153, 154 shouldn't be that difficult to reach. And again, that'll have implications also for the financials and the energy sector as a whole. I hope this makes sense, guys, and I'll see you in the next video.